Now that you understand why recognizing your triggers is essential, let us walk through how trigger awareness mapping actually works. The purpose of this method is to reveal the specific events that shift your emotional state before you notice it happening. Most traders believe they react only to price movement. But the truth is that reactions begin much earlier. They begin when a trader activates a mental pattern that quietly alters your perception of structure, risk, and timing. The first step is identifying the moment before the reaction. When something changes in your focus, your breathing, or your urgency, pause and ask what happened just seconds earlier. Was it a sudden candle spike, a news alert, a message on your phone, a missed setup? These tiny events create internal tension that feels unrelated to trading, yet they directly influence how aggressively or defensively you engage with the market. The second step is labeling the trigger. Give that event a clear name so your brain can recognize it later. For example, missed entry trigger, sudden volatility trigger, P&L check trigger, unexpected distraction trigger. When you label a trigger, you turn it from an unconscious impulse into a visible pattern. And once you can see the pattern, it loses its ability to control your decisions without permission. The third step is mapping the emotional response that follows the trigger. Ask yourself what the event causes inside you. Does a missed setup create frustration? Does a fast candle create fear of missing out? Does a loss create urgency to recover? Does a win create excitement that leads to oversized risk? Understanding this emotional link is the key. The trigger starts the reaction, but the emotion drives the behavior that follows. The fourth step is matching the trigger to the behavior it produces. For example, a volatility trigger may push you into rushed entries. A frustration trigger may lead to revenge setups. A distraction trigger may cause hesitation. A P&L trigger may lead to cutting trades too early. When you understand the chain from trigger to emotion to action, you gain the power to interrupt it before it becomes a trading mistake. The final step is creating a corrective response. Once you recognize the trigger, apply a simple action that resets your state. It could be a deep breath, a 5-second pause, a quick note in your journal, or even stepping back for a moment. The goal is not to eliminate triggers. The goal is to avoid letting them run your trading decisions. With repetition, this mapping becomes instinctive, allowing you to stay steady even when the market or your environment becomes chaotic.